I am Benjamin Kalman. I am director of New York State's Canada office. I'm here with my distinguished colleague Abdul Jendi, who is my deputy director, and we are part of the Global Foreign Office Network of New York. We represent a country which is the second largest in the world, nearly 4 million square miles. And we have about 10% of the US population, give or take, as well as a very, very long border, 5,500 miles with 126 border crossings. And I believe that's the most active border in the world. We have two languages, English and French as our official languages, although there are a lot more spoken here. And we are a stable economy, which is part of the reason that we are such an important partnership between US and Canada, is because of two very strong, very stable economies that work very well together. So Canada has economic output of $1.7 trillion. Our GDP growth was 1.7% in 2019, which was up a couple of points. It was about 1.5% the year previous. This year's forecast, because of COVID and everything that's happened within the economy, is going to be minus 6.8%. That's a projection. But because of the strength of our economy right now, it's projected to rebound by 5.5% next year. And another very interesting statistic about the Canadian economy is that we have an unemployment rate of only 5.5% as of January of this year, which is also down about 2 points. It was 5.7% last year, and that is the lowest that we've had in unemployment in a couple of decades. And even with COVID affecting us, the unemployment rate hasn't shifted dramatically. We have 5 key sectors in Canada: agriculture, energy, manufacturing, services, and technology. Agriculture, we are one of the largest suppliers of agricultural products in the world, and most of our crops are actually exported to the US. For energy, we have a lot of natural resources. We have oil and natural gas, particularly out of Alberta, but in other regions as well, that actually rivals the US, especially per capita, and we export a lot of that to the US as well. We have abundant hydropower, especially in Ontario and Quebec, and we export a lot of that to New York State. We have shown a lot of growth in energy and solar and wind power. So in terms of climate responsibility, that has helped us with our own carbon footprint. Manufacturing is about 14% of our GDP. And with the automotive sector having rebounded quite heavily in the last couple of years, particularly anchored by artificial intelligence and autonomous vehicle technology, Ontario and Quebec being main foci for that, that has helped that rebound of our GDP as well in manufacturing. And Montreal has the 3rd largest aerospace hub in the world, behind only Toulouse and Seattle. And there isn't really much competition behind them. Those are the 3 big ones, and Montreal has a huge aerospace hub. It is the largest sector in Montreal, and a very high portion of both employment as well as GDP for the province of Quebec. Services are the big part of Canada. 80% of our GDP is in services. The Greater Toronto Area being one of the big areas in Canada, it's the most populous area and has a very large service sector. Financial services is key to that. It is the fastest growing financial sector in North America, and this not only the highest concentration of employment for a major metropolitan area, but also ranks 2nd in terms of being an international finance center in North America. I believe New York is the only area that's higher, and Chicago is in 3rd, and it's 8th in the world. Finally, technology is a high growth sector in Canada, and it has been growing at a frenetic pace. We are considered to be the Silicon Valley of the North, and that's anchored very heavily by fintech, by artificial intelligence, blockchain technology, cybersecurity, etc. you have Toronto, Montreal, and Ottawa, especially cybersecurity in Ottawa, as the three key cities in that. But there are a lot of secondary cities like Edmonton, Vancouver, and Halifax, which are growing very steadily in the internet technology world, information technology, world. Why export to Canada? Well, Canada is the U.S. largest export market. And as you saw in Lennox's presentation, it's also New York's largest export market. It amounts to $293 billion in export trade in 2019. 64 billion of that is in services alone, let alone the goods. That is a raise of up to 54% since 2004, and then nearly 200% since NAFTA came into effect in 1993. As well, Canada is a very stable market. As I mentioned earlier, it's been rebounding faster than projected, partially because of the stability of the market, and it continuously beats projections, both in terms of the losses due to this year's struggles, as well as the rebound projected for next year. The Kearney FDI Confidence Index, which is considered the most important index in the world for foreign investment, we have ranked second in the world behind only the US. A lot of that is due to regulatory environment in Canada, political stability, as well as economic stability, favorable taxes, our digital infrastructure, participation in various free trade agreements, including the recently signed USMCA, as well as our Pan-Pacific partnership with Southeast Asia, and our European trade agreement, which came into effect last 2 years ago now. As well, climate change risks are considered to be minimal in Canada, partially due to our position in the north of the hemisphere, as well as our carbon footprint, as well as our active stance towards eliminating climate change risk. Finally, the USMCA, which I just mentioned, the ratification of that earlier this year means that trade continues steadily between our countries, as well as Mexico, and it minimizes the impediments between countries in terms of trade flowing across the border, which has shown its hand steadily during the COVID crisis, because trade has been an issue that has not been a major impact towards companies on either side of the border and their export. So the effects of COVID-19, well, one positive is that, as I just mentioned, the border remains open for trade. And even though the border has been closed and will very likely remain closed for the coming several months, for the general public to be going back and forth across, so cross-border shopping, cross-border tourism has certainly taken a hit. In terms of trade, the trucks and the trains keep flowing across the border. And that means that a lot of companies that may have seen significant issues, both in terms of export and supply chain, have been saved because of that fact. Retail and hospitality industries are the industries that have been hit the hardest, both in terms of shopping, in terms of tourism, everything from restaurants and hotels to airlines have certainly been hit. In terms of New York to Canada trade, that hasn't had a massive effect. Certainly there are some companies that have dealt with supplies and, especially in the agricultural side, as well as the product side for hotels and restaurants, have taken that hit. But overall, based on the trade that comes back and forth, especially in manufacturing and in services, that has not had as significant an impact as it has with other countries. Our economic response plan has been favorable as a result of very quick response from the Canadian government, both in terms of the CERB, which the CERB has given both individuals who need unemployment insurance very quickly because of lost jobs and layoffs from COVID, as well as small businesses that have needed a bit of a push to make sure to keep heads in the chairs in their companies, as well as to make sure that they keep the businesses running smoothly. Canada has been at the top of the chain in terms of getting that response out quickly, getting financial assistance as quickly as possible. And then, of course, economic projections allow us to have shown that we have allowed ourselves to continue business running smoothly with a minimal effect as compared to some areas which were a little bit less prepared. Thankfully, COVID hit us after some other regions, which allowed us to have certain things, certain policies in place and on the table in time to get the people who were affected the most the help that they needed. The USMCA, which I mentioned earlier, and that's the United States-Mexico-Canadian Agreement, replaced NAFTA and was ratified earlier this year. A lot of things were improved in this from NAFTA. A lot of issues that various countries had across the two main borders have been dealt with and addressed in a way that all three countries were happy with the results. I pointed out 6 in particular that have an effect on small businesses more than anything else, but in terms of export trade for all three countries. The de minimis is basically the tax-free levels that have improved in terms of Canada from $20 to $40 as a minimum tax-free level, and we provide duty-free shipments for up to $115. That is the highest in decades for Canada. Mexico has also increased theirs. Their de minimis is $50 US and tax-free up to $117 US. So basically that makes trade for export trade for companies in the US much smoother and much easier with higher minimums, making lower values getting across the border without taxes. Labor, well, that's more of an issue for Mexico than Canada because the main concern was that automotive needed to be manufactured minimum 40 to 45% with a minimum salary of $16 per hour, which was something that Canada already had in place, much higher than that levels than that. But there are certain bargaining capacities of labor unions which will make labor fairer and smoother, hopefully meaning that work stoppages will be less frequent than they have been in the last couple of years as NAFTA was coming to its close. Intellectual property, mostly for things like sound and video, etc., in the arts and entertainment, but also very key to, for example, biotechnology. Agricultural chemicals alone have been raised from 5 to 10 years as their extension for exclusivity period for the intellectual property of its products, which means that even in sectors that are not entertainment, there are certain clauses which helps to maintain their IP, extend the period of exclusivity, which means maximizing profits and export value into Canada. The elimination of foreign office is very important for small businesses. Now you don't need, for example, an Apple Canada. So if you have a company that is expanding into Canada, you don't need a Canadian headquarters. You need only a single North American headquarters. So that means that your headquarters in New York State will be sufficient as your headquarters in Canada as well, which minimizes the necessity for operations in Canada, which means you can expand to Canada or export to Canada without having the snag that you might have had otherwise by needing that office. Industry changes, several industries had some changes to them. Dairy and automotive were the most obvious ones. For dairy, you had tariff-free provisions, which raised the access from 3.25% to 3.6%, as well as eliminating their Class 7 pricing provisions on certain products. So it allows you to better price your product and get more product into Canada with a lower percentage, or I should say a higher percentage of tariff-free access. As well, automotive, they raised the requirements from 62.5% up to 85% in terms of the amount that needs to be manufactured in North America. So that means that a lot of the concern that companies, especially in the US, had about foreign non-North American automotive companies in Europe, Asia, etc., flooding the market with products. Now more of the vehicle has to be manufactured in North America, which helps the automotive industry that has thrived cross-border between, for example, New York State and Ontario. New York State and Quebec for aerospace as well kind of feeds off of that. Finally, the sunset clause. This means that every 6 years it has to be reviewed, which means that there is the option to sunset it after 16 years. And if any concerns arise, it can be dealt with on a 6-year basis. So there isn't a very long-term no change impact, which means that if anything that has been changed is not working well, or if the economy means that we need to look into something a little more cautiously and make some shifts in the percentages, or in other industries that haven't maybe been affected in this specific deal, now we can address those. And we can also extend that every 6 years for an additional 16 years, which means that if things are going smoothly, we can keep the trade agreement going. So it makes it a lot more friendly if there is an industry or a country that feels a little bit aggrieved, then they can address that. Canadian imports, as Lennox said earlier, $75 billion of exports from New York worldwide. Well, $15 billion that'll go to Canada alone. That's nearly 6.5% of Canadian imports from the USA in total. That's a pretty substantial number. And I will turn it over to my colleague, Abdul, who will go into this a little bit more in detail in terms of exports from the USA to Canada, as well as from New York to Canada. I turn the mic to you, Abdul.
Thank you so much, Ben, and hello everyone, and thanks for joining us. As Ben mentioned, the 6.5% figure is not something that happened yesterday. This has been going on for at least the past 10 years. New York happens to secure its position among the top 5 states trading with Canada, whether exporting or importing to Canada. For the past 10 years, New York had been among the top 5. To put things in perspective, this also goes from Canada to New York. Canada actually sells more to New York than it sells to China. So this is the size of relations and the depth of integration among the states and the cross-border manufacturing that's going on. New York is proximity to Canada's 2 most populated provinces, Quebec and Ontario. Both of these provinces combined hold almost 60% of Canada's population, around 22 million. Toronto, Montreal, Ottawa, all these 3 cities have been growing at a pace, and each one of them, as Ben mentioned, at their industries. So whether it's the tech sector, the aerospace, cybersecurity, they've been all growing. And these 3 cities are just an hour and a half flight from New York City. And some of them are for example, Plattsburgh is considered Montreal's American suburb, with many people commuting on a daily basis prior to COVID, of course. It's just over an hour drive. They have some families, friends living on both borders. Let's say Toronto, it's just an hour and a half drive from Buffalo. Many companies have offices on both sides of the border. The team travel back and forth. They have friends, families, and things are going well for them, having the best of both worlds. Besides that, New York happens to enjoy its position among the prime location in the automotive and aerospace structures, and lots of cross-border manufacturing and value-added services going on. In the following slides, we're going to go through the top 10 industries. I just want to highlight that these are at a 5-digit NAICS code. We thought that this would be beneficial for us to have an in-depth idea, not just a general industry, let's say if we say oil and gas or agriculture. And this will help us see the trend. First of all, the Canadian imports from the US in general, and then we'll go into New York itself. 5 of the top 10 on this list are parts manufacturing. And it also goes well to from Canadian exports to the US, which means that lots of products and items travel across the border before reaching their final user. For example, an aluminium bar can start in Canada, and after a couple of border crossings can end up in Canada as well as a airplane wing or an engine component. And the New York follows. Ben, if we can go to the next slide. So besides the top 10, these are just the top 10. We have 63% items we can explore and industries that are waiting there to be listed among the top 10. This accounts for almost $150 billion. It can be agricultural goods, equipment, and technology to support Canada's growing sector. Paper products, it's another waiting to reach the top 10. Electronics, medical equipment, and organic chemicals. Moving to New York's trading with Canada. So on this, New York also follows the general trend with having lots of cross-border manufacturing, but with a bit of a different mix. So we have from this list, we have the jewelry, aluminium, natural gas, paper products. They all go across the border. So we have gold or silver items can travel across the border and end up being sold at New York's Fashion Avenue. And this, of course, is only almost 20%. Remaining 81% of almost $12 billion is there to explore as well. It can be navigational products and maritime equipment. This is, for example, for Canada's ocean institutes in Nova Scotia, the aerospace parts, it's also there. Agricultural goods, again, for example, fruits, vegetables, the canned, the dried, and material handling equipment to support the cross-border manufacturing. Of course, these slides only shed light on the product, the goods, and we have a whole sector of services there to support all this cross-border manufacturing and relations between the companies. I see from our guest list today, some of them are into the service sector, which might be interesting. The US offered services to Canada worth $60 billion just last year, out of which New York had the share of $8.5 billion, half of which were financial and business services, and the bulk of the remaining were travel and transportation services at about $2.7 billion. This was just from New York. And this all proves that such cross-border manufacturing and relations between companies, it has a whole supply chain to support it and lots of opportunities to explore in that region and in that part of the border, let's say. I'll leave it to Ben to give you a better idea about what our office in Canada can support you with. And we look forward to working with you and assisting your growth in New York and in Canada.
Thank you so much, Abdul. Yeah, as Abdul was saying, cross-border between New York State and Canada is huge. You know, Canada is a massive market for the US and always has been. We have always had a very close partnership in import-export relations. And the fact that we have a global office in Canada shows the importance of the market for New York State. What we do as the Canadian Global Foreign Office for American companies and based in New York is we offer a handful of services mostly related to what Lennox was discussing earlier in terms of the export marketing assistance service, the STEP program, and the grants that are offered to help bilaterally with companies based in New York that want to look to the Canadian market, the various steps that they need to take, both to export and expand there. What we try to do is make that as simple and as smooth as possible for you. One of the things that we do is through the Export Marketing Assistance Service, we offer industry reports specifically customized to your company and your industry. So for example, if you are exporting a specific type of product or service for the aerospace industry, for the fintech service market, whatever the case may be. We will give you a report that tells you what the sector is like in Canada, where the hotspots are, what the main cities are for targeting, who the main chambers of commerce are, who the main industry organizations are, and what kinds of sectors or companies would be the kinds of targets you'll be looking at. Not only that, but we will actually create a list of potential sales agents or distributors, representatives for you, or identify potential partners for you in Canada. And then we will do a basic level of contact with them just to ask them if they'd be willing to sit at the table and talk to your company about representing you. That way you have some contacts, you have a first step towards finding the people that can help you to export your product into Canada. And you'll get a yes or no answer from them, so you know who to target and who to avoid. As well, as was mentioned by Lennox, there are several trade show and trade mission services that we offer in terms of bringing companies into Canada, either physically or virtually, to meet with people who are in the industries, who are in the cities, in the top regions, whether they are regional economic developers, whether they are tax lawyers, whether they are accountants, people that specialize in cross-border trade, or whether they're actual companies that could be potential supply chain partners, that could be distributors, that could be the people that buy your product. We will try to set up at least a handful of B2B matchmaking sessions with these companies, so you can talk to them one-on-one and get a better handle on not only whether they will be a potential partner, but what would be a good partner for you. And we can handle some referrals and vetting for you as well. Occasionally, if you have need to get in touch with a trade organization or a chamber of commerce, to get in touch with someone who would be a lawyer or accountant who specializes in cross-border service. We obviously can't favor one company versus another, but we can put you in touch with someone who can get you a list of contacts or a good partner for you to deal with the needs that you have. So that is our Global Foreign Office in Canada in a nutshell. We will, of course, as Lennox said, provide this presentation to those who wish, and you will have our contact information, our email, as well as the phone number to call if you have any questions specifically about the programs, like the EMIS programs and the STEP programs, etc., from New York State to Canada. So thank you all so very much for joining us. It's been a pleasure to present the glory of the Canadian market for New York companies to you. And I will hand it back over to Lennox and to Maggie to deal with any questions that might have popped up from our participants.